Okay, in this video I'm going to go over support and resistance, actually horizontal support and resistance lines, which is very basic technical analysis. Some might not even classify it as technical analysis because it's not, like stochastic or MACD, having to read those indicators. It's very basic, very easy to understand actually, but very powerful. I use it, support and resistance lines, a lot in my trading. So let's just get started here by looking at this graph here of UPS, and I'm looking at this on finviz.com, which is nice because they illustrate the lines for you. They generally will show you where support is, resistance, so on and so forth. But if you're not using finviz or any other software, whatever, might offer you a something you can draw over or just hold a straight edge up to your computer and you can see here. So so looking at this here at UPS, we can see before May 2nd, 3rd, 4th, whatever this is here, kind of bumped up against this price level a few times, 2-3 times, up against this $85 level. So of course we can see that that was some pretty strong resistance. So if we were long the position, this might be a good area. If we see it bumping up against it, might be a good area to exit the position, just to play it safe. Also, as I showed, I believe it was in the video previous to this, conversely, it may be, if we want to catch this on the breakout above the resistance, this might be a good place to buy. Of course, you could use a trigger buy order to do that. This stock didn't really break out much, but of course, you get the point. And I like to use the analogy when it comes to resistance. Generally, when a stock breaks above resistance, it may then use that same level as support as UPS did here. So I like to use the analogy of, if it's like swimming under a sheet of ice. You may bump up against it. Once you break above it, you may then, hopefully, you're able to use that sheet of ice as support. And that happens very frequently. You'll notice with stocks. Of course, all stocks, ETFs are different, but you see it here. UPS did the exact same thing. So, or the exact same thing as what I mentioned there. So this may, if you're long in the position, this may be a good place to set a stop loss order. We've kind of gone over that a little bit in previous videos of order placement, things like that. So that's the basics of support and resistance here. I'll just show you a couple other graphs just to illustrate further. SPY here, the ETF that tracks the S&P 500, didn't really establish resistance here. It doesn't look like, but looks to me and to finviz.com that this is a good place for support. So so if traders see the SPY ETF fall below this, looks like 157.50 level, they may take that as a sign that it's time to get out. And it's again pretty frequent that happens, that's a psychological level where people see, hey, it's below that. It might have gotten below it one day, but if it stays below that, it could really signify a new downtrend, just like it signified a new uptrend here. Another graph to look at, Apple. Here's a good one. Some very strong support here, it looks like, because we have a double bottom. Also, though, strong resistance because we had a multiple top. And once it broke above that strong resistance, likely to stay above this, I would think. Gold is the last one we'll look at. This is not gold actually, but it's the ETF, Spider Gold shares. Gold tumbled pretty hard in April, found that 130, or Spider Gold shares found that 130 level as very strong support. Then in June, blasted through it, was able to climb back above. Now, who knows what gold's going to do, but I would guess that it's going to continue to use this 130 level as support. So again, potentially good places to buy and sell. You can obviously determine that on your own. So I'll go in another video. I'll go over what you see here. These diagonal lines, these price channels here. Go over more of that in detail. But these horizontal support and resistance levels. That's basically, the gist of them. And again, very powerful to pay attention to those levels because they often signify a change in direction of the stock.